It sounds super promotional, but like this question, I think is designed for me and this specific situation. Ultimately, I think people should use Portfolio Pilot.
Welcome to Unstoppable Podcast with Harry Sardinas, inspiring conversations with influential millionaires, investors, thought leaders, entrepreneurs who are making a massive difference with their innovative products and services, and sharing the challenges and wisdom of how they sold their first million.
And what they can. But then, Alexander, there are a second part that we're gonna talk about briefly, which is we all, especially in this podcast, all our listeners, everybody want to make money, everybody want to make the first million, everybody want to get the product market fit. But it's a second part of the question that very few people talk about, which is keeping that money. And here I talk a lot about this in this podcast. That, for example, we have decent entrepreneurs that they focus in the second thing. I think is very good. The good thing about this is both things are working for you because you actually working in something that will plan your finance and make it grow. So thank you so much, Alexander. I think you're brilliant. So clever, yeah. Spend more time in the beach or in Liberia or whatever. Yeah, don't work too hard. You're too young. And for all the business making money, they take all the money, they reinvest in the business. The business spend more, they take all the money, they reinvest in the business, and then once they created this big business, then COVID happened, something happened, the market changed, Airbnb come, whatever, and all of a sudden you're out of business and you have zero. So.
Right.
A more effective way could be, in my opinion, looking back, my own experience, and is something like that you have a financial advisor, same like the thing that you did, and I actually think that's very useful for the entrepreneurs, for our listeners, is that, okay, you're making money with your business. Okay, how about if you take some of this money and you buy a property, to give an example, and you rent the property, and after you pay the mortgage, the extra that the rent give you, you can use this money for marketing. Imagine you can have, and then what happened? You need more money for marketing. Okay, let's buy another house. To give you an example, or let's put the finance in another asset class that are all shares that give dividends. So guess what happened? If something happened, well, you still have your cash flow coming into you, and I think that all the entrepreneurs deserve it.
I think it is. I think you're absolutely right. Most people are focusing on
But
the
nobody
alpha,
talks
and
about
most
this.
people are
Nobody talk
focusing on
about
like,
this, and so it would be amazing if in this thing that you're developing, you can add something specific for the entrepreneurs. How they you following this broadcast in our next episode of Unstoppable, how great entrepreneurs like Alexander break that wall and achieve the first million. Bye for now.
Thank you so much for having me. Great day.
Pleasure.
For my income bracket, for where we live, and it's state specific, there's federal specific, and it just gets more and more comprehensive, right? And the main idea, the main benefit with having it be this programmatic system is that we code in some new tax rule or something about estate planning or some optimization opportunity, some new metric. We connect it through to a bunch more macro series or some underlying regression models, and it gets better for everybody involved, right? And so it sounds super promotional, but like this question, I think is designed for me and this specific situation. Ultimately, I think people should use Portfolio Pilot. My wife's startup equity, the startup equity that I have in Portfolio Pilot is modeled in Portfolio Pilot, and it's private equity. There's a drop-down startup equity, and we're tracking that compared to like this startup equity index, and we can attribute it to tech exposure, and it's US country, and we have certain expected returns and a risk profile. You can think about it as sort of leveraged public markets tech with a little bit of a leg. And so all of that gets threaded through and connected.
What can they do with the profit?
Yeah,
because it's not always a good idea,
I mean,
especially if you're in tech. I'm not saying anything, but take such a high risk.
super high risk.
If all the money that
absolutely.
you're making, you're putting everything inside there and everything, I think, my opinion, could be very, very high risk because, it's very
And
dynamic
honestly,
and things
this is
market
what
change
I
very
wanted
quickly.
for myself, right? Like I sold my
Been
previous
there, no,
business.
I know everything they're
We
going
we bought a
through.
house in the Bay
Hold
Area.
on, and
We
I know
had
what happened. I
kids,
know what
right?
happened. Now you went to a financial advisor, and the people
Mm,
are coming to you. They look, this is how it's gonna be. I want your money, and I'm gonna make it work for you, and I'm gonna do this and this. But don't worry too much about what I'm gonna do with it. I just will increase you X%. And you are like, man, but what is the risk involved? Is it really true? It's my money, it didn't come out from the sky. I have to be the tech company. Maybe
are the fees worth
your
it?
financial
Can we run
advisor
some
don't know
crisis
what it
analysis?
takes, to be in a tech company. So I think that, of course, that I read the report also, for example, that the Super Bowl players, 70%, high percentage, they that these people get paid millions, they all fight for bankruptcy again because
The
the
same thing in
people,
lottery winners, right? It's
yeah.
like it's a very common story.
So,
I think
and
probably
then you have
half of
people
what
that
you
start
need to
with
pay
nothing,
attention to is
entrepreneurs. You have entrepreneurs, you have people start with nothing, but doing the
right.
right decision like you're doing, and then they end up really, really wealthy. People in this podcast, you will be surprised how wealthy they are. The entrepreneurs that we have interviewed here, but because they very carefully plan this, but unfortunately nobody talks about this. Definitely they don't teach in the school. Definitely if we don't, uh, so how you find out, or what do you think that can what can we do to give a financial advisor, could be, let's call it different, let's call it how to mitigate the risk of the hard working entrepreneurs in order for them for be compensated for the job what they're doing, and when they have success, they need to know their choices, and they need to know at least the risk that, what because when we love, I'm an entrepreneur, same like you're so in love with the product and with what you're doing, that that's your world. You forget about anything that's going out of the world. And sometimes again, we the entrepreneurs don't know the level of risk of exposure that they have by putting all the money in the business. So what's your view, Alexander, and what do you have in mind for your software to try to help entrepreneurs to become healthy? This broadcast is all about entrepreneurs to be wealthy, healthy, and happy. The three things.
Right.
Because
Exactly.
so
Yeah, that's the goal. I
so
mean, we built Portfolio Pilot for this exact purpose, right? The whole point of Portfolio Pilot is for Alexander Harmsen to figure out what do I do with some of this newfound liquidity after I sold my previous company. I talked to 20 wealth managers and private bankers and financial advisors, and
you
a
were
lot
not
of them were
convinced.
salespeople and not
You were not
giving me
convinced.
real personalized financial advice. My wife runs a biotech company. They've raised tens of millions and they're doing great. They sell to some of the biggest pharma companies in the world.
Wow.
And we bought a house in the Bay Area. We started a family. We have 2 toddlers now. And I wanted advice for my specific situation. I thought, expect the returns, right? I have a fairly high risk tolerance, but think about some of the downside protection, right? Inflation in 2021 started becoming sort of a big topic. Are we in a big bubble? What if there's a big recession? COVID, is that going to tank everything? What's going to happen to oil prices and shipping and travel, and which sectors are going to break? And so I built something for myself that basically just took my situation with the house that we just bought, and I have a bit of a crypto portfolio, and I have a 401k, and I have my wife's IRA, and we have obviously the startup equity. There's a bit of cash sitting there. We're starting to do some public market investing. And what if we do angel investing? And I want to model all these different things out. And I want some scoring mechanism to decide expected returns and Sharpe ratio and downside
And if it's well
protection. And
balanced,
there's sort of this whole Bridgewater philosophy of the all-weather portfolio. And how do I compare my crypto portfolio to my real estate? There's a certain leverage involved with the mortgage. And so we built all these different things out to ultimately result in one portfolio score. We can run different crisis simulations. We can model that forward in time, 30 years with different scenarios and different, life events. Taxes end up being a huge part of like every single one of these decisions. And so you have to thread through a tax model.
Really
We're constantly adding more scenarios, as you can imagine, right? A big question that comes up is, okay, what happens if I have to take 50% salary over the next 3 years? How does that affect my retirement plan? What happens if I get married or get divorced? Or, you want to, even if, just try it once, don't save it as a setting, but it might be useful to answer that question. Things like this, I think, are a core part of why people want advice, they want guidance. And, a model like this should work, for you when you're poor, starting out, 19 years old, your first startup, you don't have, more than a penny to your name. And it should work if you have, $10 million after an exit.
Absolutely.
And, you're figuring out what to do next. And you can, figure out if you're trying to invest in private debt or some, your third property or whatever it is.
Yeah. Thank you so much, Alexander, for this broadcast. I think that that what you have created, I genuinely believe that is amazing and can really help entrepreneurs. And we need to continue the conversation regarding how to keep the wealth, because everybody's so focused to get the product market fit. Everybody's so focused to set the millions. Everybody's so focused in increasing revenue and to exit the company. But after people are sitting with all this cash, if you're not well prepared, if you don't have some knowledge, if you don't have some software or some tool that can give you some guidance, it's very easy to take a wrong decision and literally lose it all. And
Right,
it's
exactly.
as difficult, and people don't know that, but it's as difficult as making the money, same as difficult is to keep it and grow it. It's not an easy task. Sounds easy, but it's not. The other day, when someone came to this broadcast and she inherited, maybe I remember, over from the parents, maybe 5 million, 10 million, and she grew it until 50 million. And then she was saying, well, Harry, but no big deal, I inherited the money. And I'm like, look, you are a genius. You are so good. The fact that you inherited 3-5 millions, it doesn't. The people might telling you, well, because you inherited this money, that's why you did well, but that's not the case. Well, let me tell you something. You get 50% of the equation, because having inherited or having that money and keeping it and make it work and expand it for 5 to 40, I think it's very impressive. Very, very impressive. So it's as difficult as to make your first million. It's as difficult to start your business and make your business. The second step, which is the step that you are now, which is having this capital and making it work for you while you are parallel, most of your time focusing in the second company. I think is very good. And the good thing about this is both things are working for you, because you actually working in something that will plan your finance and make it grow. So thank you so much, Alexander. I think you're brilliant. So clever. Yeah, spend more time in the beach or in Liberia or whatever. Yeah, don't work too hard. You're too young. And for all of you following this broadcast, our next episode of Unstoppable, how great entrepreneurs like Alexander break that wall and achieve the first million. Bye for now.
Thank you so much for having me. Great day.
Pleasure.
Follow us for more interviews with world's most influential, audacious entrepreneurs that overcame challenges and adversity, providing you with the blueprint of how they sold their first million so you can grow your business exponentially.